Hello po, good day everyone, good day sir. Today po I'm going to answer the question on what is Tobin's Q and what does it have to do with investment. So, a brief introduction on who is behind the theory of Tobin's Q. Okay, so the Tobin's Q ratio is popularized theory by James Tobin. So, he's an American economist who gained a Nobel Prize in 1981 because of his theories and works. He's widely known as he was pronounced as one of the greatest macroeconomic in his generation. So, firstly, I'm going to answer about the definition of Tobin's theory and what does it do in reality and how it can be related with investment like stock market such and such. Uh, yeah. So according to the website that I got source from, the which is Investopedia. So the Q ratio, also known as Tobin's Q, equals the market value of a company divided by its assets replacement cost, which also written as this in this picture, which is I got it from the module 8. Yeah, there. So as you can see in the slide, is that a Q ratio or Tobin's Q is divided by the total market value of firms by their total assets, or yeah, it could be replacement cost of capital. Yeah. So based on my understanding on is the formula has what the formula has, the numerator is the value of the economy's capital as determined by the stock market. It means that the specific value is set by the market today. So yung numerator po yung nagse-set, yung numerator po, yung value po ng numerator is yung parang ano po, yung market po yung nagse-set ng price. Parang standard nila po yung market po today. Yung ayan. So while on the other hand, the denominator is the price of the capital, which how it was purchased today, which means that the value should be the price of how much you first purchased it. So yun, yung kung magkano na po binili yung capital na yun, like kung ano po yung value, kung ano po yung price. So, yun po yung pagkakaintindi ko. So for example, it would be some sort of like your investment in a stock, for example. So in theory, if the Q is greater than 1, it means that the value is overvalued, which means that the cost of market value is more likely to be expensive. So it is not advisable to invest when you're planning to invest in it. For example, when you're buying a stock of shares, for example. Yeah. So if naman if the Q is less than 1, it means that the stock is undervalued. So in this theory, Tobins can somewhat help investor in making decisions in whether to invest in a certain stock in the stock market, for example, when especially going in for the long term. Although it cannot predict a stock market crash, it is actually helpful for long-term investors analyze the market's value because, of course, syempre, investors money nila yun. Parang money po nila yun. Then, they have to, ano, because their money is at stake po. Parang ganun. So, if the Q, so yun, note po, if the Q ratio is high, it means that the price of share be be leading to more. Ayan, if the Q ratio is high, it means that the price of share will also be high. So yun, maging high po yung price of share in the stock, leading to more firms investing in that market po. Yun, ganun. So yun. So number two, if Q is greater than yeah, is greater than one, then firms will most likely buy the stock, leading to more capital increase. So it means that the market is growing po. So yeah. Yun lang po yung pagkakaintindi ko. And uh, I think that sums up my explanation. And yeah, thank you for listening.